Hey, what's up, Rookie Trades? So today we're going to be talking about what's the difference with a trader and an investor. So that's what we're going to be answering today, and we're going to try to figure out, is it possible you can do both? So when you think investor traditionally, I guess you're thinking of people like Warren Buffett, okay? People who buy stocks or invest in a company for the long run, okay? An investor typically take more time to analyze a company finances, how much money do they have on the balance sheet, what the projections are, and they care less about the stock price per se, but more the value of the business and where it sees the business in the next 5 or 10 years. So they actually consider in buying a stock or invest in is actually buying a piece of a company. And if you don't know what buying a stock is, you could always check out that video of, breaking down what the stock is, because this channel is for the beginners 101. So we're trying to go through things as simple as possible so we could all understand. So the investors are investing in a company and not the stock price. And generally speaking, when they buy it, they keep it for years on end. What is a trader? A typical trader would buy a stock based on the stock price. They may not know anything about the company fundamentals. It doesn't have to necessarily be penny stocks, because the moment people think about trading, they think about penny stocks. But they're looking for a stock that has lots of volume and moves and fluctuates between the price a lot for the day. So volatility. And that trader is going to try to get in and out of a position as many times as possible, as quickly as possible, for the maximum profit. So let's say he's trading stock Tesla, for example. If Tesla opens up at $700 and it has a small spike up to $710, or $10 spread, the trader probably bought 100 shares or 200 shares and try to dump those shares immediately, sometimes within minutes, sometimes within hours, to get their profit out. And they may re-enter a trade multiple times for the day. And that's what a trader is. Traders may sometimes hang on to a trade for a day or two, what they call swing trading. So if they know companies coming up with earnings and the earnings might be good, they might ride that. So they buy the stock before the earnings call. When the earnings turn out to be good, they will flip that and sell it. So again, an investor is about the long term. A trader is about the short term. An investor will analyze a company and not worry too much about the stock price and find value in a specific company and want to stay in it for a long period of time. A trader may not care about the company fundamentals, but more about the volatility and the quick movements of the stock price. Now, can you do both? My answer is yes. I personally am both a trader and an investor. I do have a long-term portfolio that I don't touch. I buy it, set it, and forget it. Those are companies that I like, companies that I think that's going to be around for a long period of time to help me diversify my portfolio. But on the flip side, I do have other accounts that I use to ride the market, to speculate, to get in and out for quick returns. Trading is very difficult. Investing, I will not say it's easy per se, but you can find some funds or some things to invest in that you can keep your money and set it and forget it. There is a difference between the two. Know the difference, know what you are, but there's no rule or law that says you can't do both. If you're trying to look for a brokerage to sign up with, you can use our Wealthsimple in the bottom. We both get $10 or something. It helps. Subscribe, like, share if that content was helpful. Peace.